Welcome back, everyone. I hope you're all doing fine and well today, and happy new month. So, in today's video, we're going to do the whole thing like we always do. We're going to talk about the economic calendar. We're going to talk about the surprise meter. We're going to talk about the top setup. Then we jump straight to the chart, and it's going to be very fast today. So let's get it straight into it. So last week Friday, we got some very interesting data that was released. We got the non-farm payroll. We got the average hourly earnings, and then we also got the unemployment rate, which in a way, this data on a normal day, okay, on a normal week, it should be a very measly data, okay, but what we saw instead was a perforated one that was extremely overrated. All right, this data or this number is not that crazy. I'm just going to say that based on my own personal opinion, these data are not that crazy. Let's start from the very beginning. So average hourly earnings was forecasted to rise from 0.3%, from 0.2%, excuse me, to 0.3%. And what we got exactly was what was forecasted, 0.3%, which was quite good. Okay, that means people are still earning more from what they were earning last month, which was quite good. All right. The unemployment rate was forecasted to also go up by from 4.1% to 4.2%. And what did we get? We got 4.2%, exactly what was forecasted. I mean, we've seen data like this over and over and over again. And the market literally just do around 50 pips, 25 pips, 30 pips, and the DXY will just go back up, come down, and we come back on Monday, we do it again and again and again. That was exactly what I was expecting when I saw the number. But you saw what happened to gold, what happened to Cardian, everything was overrated. Now let's talk about NFP. You might say NFP came quite shorter. All right. Now, the first thing is, okay, the NFP itself was quietly reversed. Okay. It was revised. So from 104K that we got, okay, which was previous in July, and the actual was 147K. That means this was reversed to 14,000. Okay. So you might argue this could be the reason why we saw that crazy pump. All right. Crazy pump in gold. We saw DXY crash. I mean, it dropped by it over. I mean, let's take a look at it together. Actually, we're going to come back to this. Let's go to DXY real quickly. So on DXY, it dropped by 1.37%. That is roughly 136 pips. That is a lot of droppings that happened to DXY just last week alone. All right. That is not something that you see every day. Okay. Every day. So that said, so what led to this? What happened? Okay, what really happened? I don't want to go into full details because we don't really have that much time to talk about all of that right here. But what I would say is, number one, we still have the tariff. Okay, we have the tariff literally coming back to the table. Okay, Trump is still rolling out some tariff in Brazil. Okay, I think EU and US are finding a common ground. In the United Kingdom, I think they found a common ground. In Canada, I think they're back because Donald Trump posted something on True Social about Canada probably getting out of their circle because of them supporting a two-state in between Palestine and Israel, stuff like that. Okay, and coupled with the fact that the Fed also did not cut rates, despite the warnings, the talk, the threats, the firing threats, all those things. Okay, Fed could have cut rate. Could have been like, guys, let's cut these things. But it's still standing on the fact that the inflation is down. Okay, labor market is pretty strong, and the economy seems to be doing pretty good. And coupled with the fact that the GDP, the advanced GDP that came out last week as well, was quite good in the United States. This is advanced quarterly GDP, and it came quite high. And we saw the impact of this in the market. We're still going to talk about this when we get to DXY. All right, advanced quarterly GDP came quite good. Okay, from negative 0.5%, we saw 2.5%, which is what was forecasted. Yesterday, I mean, the last time we had a conversation like this, I said we're probably not going to get 2.5%, maybe 1% or 1.2% or 1.5%. I was actually expecting something below 2.5%, to be honest with you. But then we got 3%, which is very good. That means myself and the analysts were both wrong, which is very good. It's part of the business. And dollar got impacted, the market went up, but then the NFP came, which is it is the measure of the number of people that got employed in the previous month. And literally the market was expecting 106 people getting employed, but we got 78 from 3 people got employed. But the revised version is the crazy part. And still, I don't think it is enough to get that reaction. But we know the market will trade in. The big players wants to make money, the institution wants to make money, and they get to make money. There's nothing anybody can do about it. So if you're caught off guard due to this, I apologize on their behalf to you. All right. So there's nothing we can do than just enjoy it and just live through it. And I hope you're living through it slowly. If you get caught off, because I took a buy on gold, I was shorting pound yen, even though I was out very early on those trades. I could have held on to them longer because I only took around where's gold again? Let's talk about gold. On gold, I literally took around because I didn't really trust NFP like that. I didn't want to hold on to my trade for long. All right. If you check the previous video, you know that I was buying gold like very, very early. Very, very early. So I took gold buy on Friday. I mean, I was still holding on to my gold trade, and I was caught off around this region. Around when the market was made around maybe 420 pips or maybe 400 pips thereabout. Okay. And then boom, 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 boom. It just got up and it was up by over 750 pips only on Friday. Okay. And you can see it went up by 2.23%. That is awfully good. All right. So, talking about gold, let's just talk about gold. Talking about gold, I think there is a possibility of a pullback. Okay. That is what I am thinking right now. You might not agree with me, especially if you're buying. I'm thinking there is a possibility that gold might come back down before it go back up. I don't like when I'm on daily time frame and stuff like this happen. All right. So that's why I like to go to the forward time frame. So back to gold. All right, we saw a break of this particular trend line. All right, it's been quite decent. We saw it retesting the market retesting this trend line three times. Okay, multiple times. All right, now we got breakout around in there. All right, it's just normal for us to expect pullback. Now, if you know good very well, okay, you've been truly good for a while. You know it does pull back, but sometimes it doesn't. It doesn't care. It will just keep flying up, keep flying up. And when it got to some very decent level, maybe around here, what you will see is probably will do something like this. Tap onto this liquidity at this demand zone, and then it will go back up. I hope it doesn't play out this way. I hope so, because I still want to get into buy trade again on gold, right? Because I was caught off way too early. So I would like a very decent pullback to this particular resistance storm support, all right? So we can do what? We can enjoy the ride, at least if that is the case. If the reason of gold is back online, if the buyers are back into the show, I would love to be a participant. But right now, I'm watching very closely. All right, that's that on gold. So let's go back to the fundamental. We're probably not going to talk about gold again today. So take that as it is. So back to the economic surprise middle. Let's wrap up on economic calendar before we go to the economic surprise middle. So first up, we have these are the data we have coming this week. We have the CHF CPI month on month coming. We have US service PMI. We have NZD employment change and unemployment rate. Both are coming. I think the CHF data is coming. The Swiss CPI data is coming on Monday, and Tuesday is when we have the service PMI, the unemployment and employment change in New Zealand. On Wednesday, the market is free of data, and on Thursday we have the United Kingdom, interest rate data coming today. Okay, the interest rate decision coming on Thursday, and finally they are planning to start cutting interest rates. I guess that is why we saw this weakness in pounds this past couple of weeks, because if you check pound yen, pound kiwi, pound Aussie, pound everything pound has been dropping consistently. Okay, since this forecast happened. So this 25 basis point cut has already been factored into the price. All right. Now, are we going to get it? I'm not sure. I don't know, genuinely. Okay. But if we get anything lower than this, maybe 50 basis points or maybe 75 basis points, which will be very crazy, by the way, it's going to be more deterrent to the pound. I'm going to tell you that. However, if we get just this 25 basis point, which was already forecasted, then, all right, then I will see maybe the market will probably do some withdrawing effect up and down, and then that will be all for it. So far, so good, based on my personal opinion. But they are planning to cut rate, so plan yourself accordingly for that, especially if you're trading pound yen. Pound yen is one of the pair that I was very annoyed that I got caught off very early out of the trade because it dropped over 300 people. Still going to talk about pound yen, all right, because I have my eyes on it. Okay, this is another kind of trade or pair you want to take your eyes off of, okay, this week. So lastly, we have an employment rate in the United States, the normal initial jobless claim in the United States on Thursday. And then on Friday, we have the employment change and unemployment rate in Canada, the same thing that we had in New Zealand. Okay, on Tuesdays and Friday we have labor data both in New Zealand and Canada respectively. So New Zealand is coming on Tuesday, and Canadian employment rate and employment change, or let's just say labor data, is coming on Friday. So prepare yourself. I don't really see any serious moves come next week, aside of Thursday when we have the initial jobless claim and the rate decision in the United Kingdom. Aside those two, I don't think anything should fret you or got you scared. Okay, you don't need to be concerned about that much. All right, just be cool in the market. So economic surprise made that real quickly. You can see the United States is back to 50% strength, which is a reduction from what we saw it last week. Pound heavily got weak by 30, you can see 38% right here. Euro is now awfully strong. So you might want to start looking into buying euro dollar, euro Aussie, euro card. All those things might be something you might want to venture into. Okay, if you are into all of that. Okay, euro yen might also be something you want to buy. You can see euro and Japanese yen is still, there's a very big gap between them. So we saw 71% strength in Japanese yen as well. NZD remained 88% strong. That is very, very decent of it and consistent of Kiwi. All right, card 67% strength. Aussie gets super weaker from 40% to 38% weak. That's pretty something. And Swiss also now got extremely strong. Okay, so Swiss yen, euro yen, you can see the way they've been pumping. It's been crazy. They were not doing any fallback. They just keep pushing up, pushing up, pushing up. So let's see what happens to those two pair come next week. Maybe I might want to look into buying them. Okay, maybe just for intraday trade or something like that. But that would just be my approach to both of them. Okay, so keep a close tab on this. I want to take a screenshot so you can better prepare yourself come next week. These are the top setup. Okay, Euro GBP is still pretty strong. I took a counter trend short on Euro GBP, and I got out around 185 pips thereabout last week, which was quite good. I was shorting though. I was shorting from that very top that I'll be showing with. I'll probably show us later. Okay, but I was shorting. Euro Aussie. I'm not sure I've actually taken Euro Aussie this month. I mean, last month I think I took a short on buy on Euro Aussie that got me caught up. Since then, I've not really taken anything on it. Euro dollar is back to being strong. Okay, it's bullish, which is very well expected. So I might look into euro dollar this week, but I'm not really sure. If I get a very good technical to support this, I will probably look into it. Nasdaq. Anything super good. I'm buying Nasdaq and Dow, to be honest, because of that pullback that we saw last week. That dump. Let me just say dump, because I read about $1.1 trillion leaving the stock market just on Friday alone. And this is the thing about the media that surrounds us. They always talk about what is leaving. They rarely talk about what was added. You understand? Like we've seen Nasdaq, S&P 500, the US indices, literally, including DAX, including Hong Kong 50, including the FTSE in the United Kingdom. All of them have been pumping for months now. Nothing you would hear. But once it dumps, they want to scare you. They want you to be scared. So they will tell you $1.1 trillion just left the stock market. $500 billion just left the crypto market. So that you'll be like, wait, let me go and close my trade. That's just the way it is. That is the psychology. That is the system that we have to trade against. We have to probably understand and trade against or do whatnot. All right. So if you're the kind of scary person, probably you don't want to join the indices market, but it's actually a very fun thing. So I'm buying. I'll probably add some more buys to my trade come next week if we get a further drop in the price of probably Nasdaq, Dow, and the rest. Okay. But after that, I'm probably just gonna buy. Just keep buying. To be honest. Okay. This is not the time for me to be scared. I was scared last time. I was scared to take some very good buy when they make that almost 30% dump. Okay, we all know what I'm talking about. All right, and if you don't, let me show you something about that. Something real smooth. So let's talk about S&P 500. Okay, sometimes ago, we saw this massive dump. Okay, it happens almost like every year or every 5 years, and we saw the market dropped by 21.9% on this. This is the S&P 500, by the way. So that was a very serious drop, because if you go back in time, right? If you go back in time, it's not something that happens every now and then. Okay, you can see it happens here, which is not as much as it was right here. Okay, so like I said, it happens like almost every year. This is the 2025 one. 2024 was actually a smooth ride, nothing really serious. Okay, and what else? Yeah, in 2020, from 2022, I think this COVID period. Okay, still part of COVID period. You see that it was actually dropping extensively. All right, crazy stuff. All right, And what else? 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 And after that, the only time we've seen another drop like this is 2020. So you can see how scanty it is. All right, very, very scanty. The S&P 500, all the indices, yes, they do pull back. They do drops, but they don't stay there forever. They might stay a month, 2 months, all right? Then they started rallying. And once they drop like that, they will always break the previous high. And that's exactly what we saw right here. It drops crazily, 22%, roughly 22%. And what happened? Boom, 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 boom. Cross this high. Crazy. It was only that I was able to take a buy from the top that I actually took advantage of. And I held on to that trade for a very long time. And that's what I'm still buying right now. Okay, I took a buy on Dow Jones somewhere around here. Okay, I added to the trade right here and I closed the trade somewhere here. Okay, it's only Dow Jones that is yet to break the previous high. The same thing, Nasdaq was able to break the previous high despite the drop. Okay, it was fortunately it was able to break the previous high right here. So that is why I took a buy on Nasdaq right here. All right, if it drops to this particular demand, I will buy again. If it drops to this particular demand, I will buy again. I'm only using 0.01. All right, and I will read. If it comes down here, that's minus $15. I'll buy again. If it drops down here, probably it will be like minus 30, and this will be like the new one will be like minus 15. I'll buy again. And believe you me, when the time is right, when it wants to go up, definitely it's gonna buy up. And now, power adventure, you break below here, pull back. I will sell. All right, I will take a buy here. I will hold both trades. Okay, I'm gonna hold both trades. When I'm making money shorting, if I see a very good setup on the finder and the technical also looks very appealing, I'm gonna short. Okay, I'm going to short because I could have shorted this one. I did not. I could have shorted this. I didn't. Right? I could have short right here, take a buy here, short again here, take a buy here, edge both trades. Just that my short has to be very well managed because I know these guys don't sell all the time. They don't sell off all the time. Okay, it's just a normal pullback. So that is the idea behind all these indices. Okay, but if you're not professional, don't forget this is not a financial advice. If you're not professional, if you're not very accustomed to how this whole thing goes, I would advise you to just follow the trend. Wait for the pullback, take a buy, hold the trade, and see how it goes in the next couple of weeks or month. All right. So on a short buy, or let me say bearish part, let's start from pound CHF is very bearish. It's a score of negative 17. That's something. Pound yen very bearish, score of negative 12. Pound NZD very bearish, score of negative 12 as well. Pound card very bearish, score of negative 9. And we have pound US dollar is still bearish, US CHF is still bearish, Aussie yen is still bearish, Aussie CHF is still bearish. All right. You can see them, you can see their score negative 7, more like negative 7 respectively. We have Aussie Kiwi, UK 100, which is 50, Pound Aussie, USD JPY, AUD card, Euro CHF, all of them bearish, score of negative 5 and negative 6 respectively. So now I have something on USD JPY, but it has not really materialized because it's been a very tight box like that is ranging. So I'm gonna show us that later. So based on my trade recommendation, I'm gonna probably talk about Nasdaq. We've already talked about Nasdaq, so we're done with that. Talk about gold, we're done with that. USD JPY, we're gonna talk about it. Pound Aussie, I'm already shorting this one. I'm gonna short pound dollar as part of my trade. It's one of my trade recommendation. I think USD CHF is also one of my trade recommendation. I'm thinking that is not there. Which other one? Pound yen, yeah, is one of my trade recommendation. Okay, I took a short. I got caught off very early, and that was that. Okay, so I want to take another one. Let's see how it goes. So that's that on the fundamentals. Okay, now let's take a look at the technicals. All right, now this is Nasdaq. I said I'm going to talk about it, but I'm just going to paraphrase. Okay, if we use trend line on this guy, okay, it's gonna look very annoying because these guys don't really like trend line like that. They don't stick to trend line like every other currency pair does. Okay, so it's gonna be something quite annoying. So I'm just gonna remove the trend line. But focusing on the demand and supply zone that these guys have left. Okay, they've left behind in the past couple of months. As a matter of fact, since April, okay, they've left some very decent demand and supply zone. And so we have a demand here. We have a demand zone here again. We have a slightly demand zone. I can't really call it demand like that. We have a demand zone right here. So, and then we have something here. These levels or these zones, they've never been mitigated, they've never been retested. So that is something that you might want to pay close attention to or you want to put at the back of your mind. So there's a possibility that we're going to get something like this. The market will fly from there, or maybe it's going to fall deeper and fly from there. All right. However, where is the mark? All right. Where will I stop buying if I'm buying this? If I'm accumulating all these orders, where would I stop buying? Because I can't just keep buying all these demand zones. Okay. What if now it's time that the stock market investors want to really crash and everything becomes zero? Which is almost impossible. Anyways, I mean anything is possible. Anything and everything is possible. But this one is almost impossible. Okay, almost impossible. but there's still a small percentage of possibilities if you really think about it. But what would lead to a global shutdown like that? I don't really know. I never really care about thinking about it, but I know very well that everything is possible in this time and age. Everything is possible, but there are some things that are almost impossible. So that's just that. So just for full disclosure, that. So I'm just gonna use my Fibonacci here real quickly, okay, to see where would I stop buying if peradventure it wants to drop. I think I'll buy from here, buy right here, potentially buy here. Where we start buying would be if it breaks below 61.8%. So all these levels are up for grabs. Okay. So that's just that, my opinion. And I'm gonna get in based on this demand zone. Okay, based on this demand zone. Now the problem about this is I could have waited for the market to come to 50%, but I know that 75% of time they do not come to 50%. Okay, these guys don't care about Fibonacci at all. They do not care. They just have to look at the demand and supply zone. That's the only way you can trade them successfully. You're looking at Fibonacci, you would be sitting down, you will be making new all-time highs, and you will be vexed, and you can't do anything because you have to stick to your system. You have to stick to your trading rules, right? So that's why I have all these demand zone all spotted on Nasdaq, and we see how it goes moving forward. Okay, for adventure, this pullback, I buy already taken it right here, right here, and right here. This other three levels, and by the time I calculated everything based on my lot size, if I'm gonna lose, I can't lose more than $100 on all of this, to be honest. And that is quite decent enough. And if I'm able to accumulate all these orders, all these buys, believe me, when the time is right for them to pump, okay, it's gonna be very, very decent. As a matter of fact, I might even have a bigger lot size at the bottom here because that is my real level. So when it's dropping, cut me out in a loss, I lose my $100 and everything is factored into it and everything looks good moving forward. So that's just my plan on Nasdaq for now. So pound yen, which is one of my trade recommendations, I told you that I took a short on this one. I took a short on Wednesday, I believe, Wednesday or Thursday, thereabout, and I never knew. I mean, truthfully, I didn't even know that the market, the big banks will perforate the NFP. That crazy. I was expecting something very decent, probably back to this region, tap back up again, just small grabs like that. That is where my take profit was. Okay, I was looking for some small grabs, tiny entries, okay, something that I can just close around the edge. Market will push a little bit to the side, drop back down again, push back up, then I can start selling from the bottom here, all the way back down to this region. But the opposite was the case. I was all fully wrong because of the NFP. The market came crazy now. Okay, that was terrible. That was terrible. So I didn't have any plan for that. I mean, you couldn't have really, nobody could have planned for something like that. And I can see some people actually jubilating on catching NFP very early, especially for consistent trader that all they do is just trade NFP. I think I wish them well. But for someone like me that trade every now and then, I mean, you couldn't have really forecast something like that on NFP. I have so many friends that were buying gold. They closed very early. They had some very nice take profit that got tap out very early. And they were bothered. Oh, I shouldn't have used take profit. I was like, bro, you did well. All right, forget the news. Just stick to your thing. And that is just the advice I would give everybody. Instead of you getting vexed over stuff like this, okay, it doesn't happen all the time. That's just one thing you need to know. All right, so that's just that, by the way. So back to pound yen. What is the plan moving forward? We've seen it. It's already been drawn out. We pull back to this region. Maybe tomorrow, Monday, maybe on Tuesdays, whatever happens. I don't really know when the pullback will happen. We might see another drop next week. Okay, I mean, it's crazy. Anything can actually happen. So we just have to watch out to see if we can get a pullback to this region, and then we can now take that fine and decent shot all the way back down. That is where I'm at right now on pound yen. So NZD dollar is another one that I'm probably going to buy immediately the market open on Sunday today. All right, I'll probably take a buy straight up right here. Okay, I have a demand zone, the extreme demand. I took a buy right here, which I got tapped out around here. It's more like a break even and small loss on NZD. You know about this, anyways. So the plan is to buy again. I didn't take this buy, by the way. All right, I didn't take this buy. However, I will be taking this one because it came to the extreme demand zone. All right. However, even if it comes down here to this previously resistance level, that I'll probably be using as support for the second time. All right, I would be buying again. Okay, and my stop loss will be at the bottom there. So this one and this one, the two entries, my stop loss will be at the very bottom there. All right, so that is that on that. Now, before we go further, let's talk about DXY real quickly because it seems like we just jumped straight into the market. Sure. So DXY, I told you last week. Okay, I said I have some levels, I have some zone. Okay, and here we are right now. Okay, here we are right now on DXY, back inside this box. And this box, what did I say? I said it is my neutral to what? To bullish. Okay, it is my neutral to bullish zone. And that is exactly where we are right now. Okay, neutral to bullish. When the market was doing what not right here, I was watching, I was speculating, I was planning, especially on pound dollar, euro dollar, Kiwi dollar, and the rest. Okay, if it ends up breaking above this 100 region, aha, I will start selling pound dollar and the rest. Okay, and probably I will go cut off on Kiwi dollar for sure, maybe in a stop loss or something. So that would definitely happen. All right. However, if this is the end of it, let me turn everything. If this is the end of it, next week we got a more bigger drop, a pullback, a bigger drop, a pullback, and the market just crashed all the way down. Well, I'll buy into the dollar, probably looking to buy euro dollar, and the rest follows. Okay. But right now, I'm still very much neutral on what? On this guy right here, on DXY. I'm still very much what? I'm still very much neutral. So pay close attention to the market. This play is still very much active. Okay, it could happen. And the further play that we can all anticipate for should be at the top here. Okay, if DXY is ready to make that jump. Anything above here, I am super bullish on DXY. Anything below here, I am very bearish on DXY. Anything in this box, I am neutral to bullish. All right. So that is just the way I see this right now. So bullish, bearish, and neutral. All right. Neutral, but neutral to bullish. Don't forget, neutral to bullish. It's not neutral. Just I'm not gonna touch it. Yeah, I can take some scalping short on pound dollar, euro dollar, okay. But neutral to bullish. But anything below here, I'm super bearish. Anything above here, I'm super bullish. That's how I see the DXY right now. So let's keep it close. Let's keep it close tab on it and see how it goes move forward. So now continuation on my trade recommendation, NZD dollar, we've talked about that. I will be looking to buy this one as early as next week. This pure technical, it looks very good. Demand on supply is on, getting retested, getting some liquidity right here, and some liquidity strip at the bottom here, which is very decent. I love the fact that it was very moderate. The whole ride that happened last week, it didn't really cause too much havoc on this one. I really respect that from Kiwi. So I'm just going to join come next week. S&P 500, I'll be looking to add a buy on that one, probably on my stock portfolio, XPX, XPR. Probably that's something I will probably be looking into come next week. Because I'm already buying Nasdaq and a very small piece of Dow Jones US30. So that's that. But S&P 500, we have a demand right here. We don't really have that much of demand moving forward. Okay, we have something quite decent here too. We have something very decent here too. This one doesn't really go back at all. All right, so maybe I'll buy here. Maybe there's a buy opportunity here, but it's gonna be probably on my stock portfolio. To be honest with you, I'm not gonna be joining or jumping into this anytime soon. Okay, on the CFD, probably on my stock portfolio. Okay, on S&P 500. But if you're a big fan of S&P 500 at the CFD asset that you want to trade, wait for it to come all the way back to this 147. Okay, 6147. Wait for it to come back to this region right here, and you can look into buy S&P 500. That is where I'm at on this one for now. Silver is the next trade recommendation that I've got my eyes on. I also want to take a buy. I've got a plan, a little bit of a plan to say that we have a quite decent move right here, potentially around this region. Okay, which was tapped out last week because of the NFP debacle. All right, let's call it that, NFP debacle. All right. However, there is a more extreme demand zone at the bottom here. Okay, so maybe, just maybe, why gold is doing that pullback that I was expecting. We talked about gold earlier. Why gold is doing that pullback, well, I was expecting. Maybe silver will also drop a little bit, come back to this zone, and I will just ride into it. Okay, I will just buy into it. But if that failed to happen, then I will just stay on my low key on it and probably keep watching how gold unravels moving forward. Okay, but I would really love silver to come back to this region, and probably let's see if we can tap into it back. However, if you're a big fan of silver, okay, very big fan of silver, and you really want to buy, this is also a very good region to buy. But your stop loss has to be right here, and your stop loss might 50% get cut off. Okay, 50% get cut off. Why? Because of that pullback has to be corrected. That pump has to be corrected at some point. There's a lot of FVG that needs to be mitigated. Maybe 50% mitigation, or maybe the whole 60, or the whole thing will probably get mitigated. I don't know. Right. So watch out very closely on silver. You can buy right here. Well, your stop loss just needs to be very, very tight. I mean, it might be a low risk buy, and then probably add to it when it comes to this bottom right here. Okay, that would be something that I would love to do. Buy here, and wait for the market to drop and add to it. However, if the market fails to drop, then you know that at least you are in with a very small portion of risk in your capital. Okay, that's still a fair game in my own dictionary. Okay, DAX 40 might be something you also want to look into. Okay, DAX 40 might be something you want to look into. The same thing I have planned on S&P 500. Okay, maybe we come back to 23,000 and 23,023. Okay, let's call it that. 23,023. That's 23,023 region right here. You might want to put in some buy and sell this. However, if you break below here and it drops further, I mean, the sky is the limit, right? 18,808 is up for grab. And why do I have a short bias on it? Because right here on H-Finder, you can see DAX 40. Oh, it has disappeared. Before I slept last night, DAX 40 was among the bearish recommended assets right here. So that's something that we should put at the back of our mind moving forward. I mean, let's check right here if we can get DAX 40. Okay, this one is loading. When it's done loading, maybe I will show it to us later. So that's that on DAX 40. Yes, currently I'm buying Bitcoin. Yes, I've been buying since last night. Before I went to bed last night, I started buying around this demand zone. Excuse me. I started buying when it comes back to retested this resistance zone support. Okay, it's a very decent buy. Okay, it's something that's just pure what I do. Okay, it's up by I think 1,160 pips right now. Okay, it could drop before the end of the day. That's very possible. And because my broker actually allowed me to trade during the weekend, that's why I was able to open this one right now. So I took a buy here that didn't really play as well, but then I didn't have it closed. I just added to it. And right now, everything seems to be like on an average around here, which is still very good. Profit on an average, that is somewhere around there. Both trade. So which is still very good in my personal opinion. So that's that on that. So this is back on DAX. Here is indices scanner. Let's go to indices scanner right now. I mean, I'll bring it back once it is done. So moving on to Ethereum. Ethereum doesn't look terrible right now. Okay, you might want to look into buying Ethereum. But the reason why I would probably hold off, probably hold off on Ethereum is this pullback. I'm not sure about this pullback. Okay, we can see that Bitcoin has some momentum. It came back to retest a previously broken structure, which is the previous resistance that turned support. If that happened to Ethereum also, we're looking at something around 2,864 region. So many people wouldn't like what I'm saying right now because they want to buy Ethereum. If I'm also sitting in the shoe, in the seat right now, and I'm watching someone tell me expecting Bitcoin to, Ethereum to come back to 2,864, I'll probably not be happy with myself. Okay, but that's just the way it is. For me to buy Ethereum successfully with confidence, probably add to my position on Ethereum, I'll probably wait for it at the bottom here. Okay, as well. So that will be that on that. Okay, so about DAX now, I think I have DAX somewhere here. Okay, it's not clicking. I don't know why. Sometimes I find I can actually play a lot of chicken. Okay, plays a lot of chicken games sometimes. So that's just that. It's also loading up. It's just gonna say how it goes. Maybe it's my internet or something. I don't know. Yeah, I think it's back now. So let's quickly talk about DAX. You can see right here, the score is 4. Probably that's not what I saw as bearish yesterday then. But because the score is 4, maybe it's just UK. Yeah, maybe it's FTSE that I saw that was counting as bullish for DAX. But for bearish for DAX, my bad on that one. So far, I think buy on DAX wouldn't look bad. So you might want to look into buying DAX 40 if you trade indices. Okay, so that's just by the way on that one. So DAX 40 looks very good. So take a close look on that. So back to Ethereum. Ethereum is simple. All right, very simple. Back to this region. Okay, and let's look for buy opportunity, or maybe just 3K. Okay, 3,070 or 28,064. Okay, anywhere between 3,070 or 2864. That is where you want to start looking to buy Ethereum. Potentially if it pulls back to that region. If it doesn't, I'll get a new high. I'll probably consider this as a demand zone worthy of pullback, and then I'll fly to yourself moving forward. Okay, but this high has to be taken out first. Okay, once the high taken out, maybe get a decent demand retest, and then look for back on Ethereum. That's just that. So moving forward to USD CAD, which is the last pair I've got something on before we wrap it up today. USD CAD bullish in my opinion, but why am I bullish on USD CAD? Because if you take a look at this, okay, US dollar is 50% neutral and CAD is 67%. I'm not gonna call this a big gap, all right, in the economic strength. So I'll just say bullish to neutral on USD CAD. I'm definitely not going to buy you the CHF. I mean, Swiss is awfully stronger than dollar right now. So best to just watch out on all of this. Okay, I might miss out on very good trades because of this, but the deal is I've made so much profit because of it as well. So that is quite decent. Just when you look at the risk to reward ratio, it kind of makes more sense than just sticking to technicals alone. So back to USD kind of actually been waiting for this pullback for a very long time. Maybe we're gonna get this pullback. Okay, maybe we're gonna get a retest of this trend line, and then we just see market to pivot back to the other side moving forward. All right. So I'm not sure. Buying from here doesn't look very good. Okay, buying from here alone doesn't look very good. Maybe another drop, a little bit of it, 50% of Bonacci that we can look into, a further buy on Btcusd. So that is where I'm at right now. USD I said I've got something very small on it. I'm not sure if you find it amusing. Because I'm not even finding anything. I'm not finding anything on USD I'm using, by the way. Okay, you're considering where we are right now. Okay, from here to here, this is awfully bad. Right? Consider, look at that. Just look at that. That's terrible. That's pure terrible. Terribleness. Okay, pure terribleness, I must say. So I don't really have anything on this one. I'm just gonna just watch it and see how it goes before. It's awful. Okay. So that's that, guys. I will see you in the next one. Please do have a fabulous day. Okay. Have a good one. Please don't get margin called. All right. And enjoy the rest of the day. Enjoy the week. Have fun. Trade cautiously. And everything I've said is not a financial advice. See you in the next one. Have a great day. Bye for now.